Well, it's 6 o'clock, everyone. Good evening and welcome, welcome, everyone to the Owning It Deep Dive. We hope that you have really learned from us on Saturday. But if you're joining us for the first time, it'll be an hour of power, I guarantee you. We're really grateful that you chose to join us this evening because we believe at Fifth Third Bank that this is a great opportunity for you to get some info that can assist you wherever you are in your home buying journey. My name is Maria Rutherford Long, and I am the Community Economic Development Manager with Fifth Third Bank, and I serve in Cincinnati and Dayton. You're going to be joined by experts from our Cincinnati and our Dayton markets, and we want you to get all that you need from this experience. So I'm going to share with you a few tips on how to enjoy this experience. I want you to mute your phone. I want you to take notes, and I want you to ask questions. You can put your questions in the chat feature or you can ask online. Just unmute your phones, but we prefer that you let us get through the first portion before you unmute your phones. Next slide, please. We want to thank our partners, our wonderful partners, the Cincinnati Herald, the Dayton Defender, the Dayton Weekly News, Working in Neighborhoods, the African American Chamber of Commerce, the Homeownership Center of Greater Dayton, the Homeownership Center of Greater Cincinnati, NARAB, ORA, Miami Valley Community Action Agency, and Alpha Kappa Alpha and Kappa Alpha Psi Sorority and Fraternities Incorporated. Thank you so much, partners. We couldn't do this without you. Next slide, please. So what you'll hear and what will happen today is, as you've seen me do the welcome, and the purpose of this deep dive is for those of you who joined us on Saturday but needed a little bit more information. We'll talk about with our experts, Dan Beckley from Fifth Third Bank, who is not a CRA loan specialist. He is the manager. He's the boss, y'all. He is the manager of the CRA loan specialists that are located here in Ohio and Kentucky. And we have Veronica, who is a Priority Plus Realty owner. And she's also a member of the Ohio Realtors Association. So we'll take your questions and then we'll have final remarks. Next slide, please. So what we'll talk about are home buying issues, your credit, your down payment, the process, buying tips. You'll hear from these two experts about what are your questions? What are the burning desires in your heart that you want to know about buying a home? And we will take a deeper dive because we've covered all of these larger topics earlier. And then you have the opportunity to set up one-on-one appointments with these two teammates. They are experts. And so you can feel free to give them a call. The information at the end will share with you their contact information, and you will be able to set up a one-on-one appointment and be able to ask anything. We're not shy about the answers, and we've been there before, so we don't want you to be shy either. There are no silly questions, so please ask. Next slide, please. Also, wanted to take the moment to do a shameless plug for the Fifth Third Bank e-bus. It's called our Empowerment Mobile, and it is rolling in the Cincinnati-Dayton area from October 3rd to October 8th. And on it, you can get on the bus and you can check your credit. We have financial education models from EverFi. We can look into fraud awareness and prevention. There's also a tool called Next Jobs, which can help you find your next job. In the homeownership space, we believe at Fifth Third Bank that building wealth is really important for every family. And we found that homeownership is probably the #1 way that Americans build wealth and pass on generational wealth. Sometimes we need to level up on our employment so that we can actually get the home that we want. So we have a tool inside our eBus called Next Jobs, and we can help you find a job. There'll also be on the first night, there'll be a homeowner seminar, and our very own Dan Beckley will be joining the Homeownership Center of Greater Cincinnati. And then we can also talk to you about how to avoid foreclosures. Next slide, please. These are the locations that they'll be at. In Cincinnati, we'll be there for 2 days at the Heights Movement, and that is in Lincoln Heights. We'll also be at our Fifth Third Operations Center, which is in Cincinnati as well. We'll be in Wilberforce, Ohio, going to both Central State University and Wilberforce University. And then finally, we will be on the 8th, we will be at the Five Rivers Health Center having a financial empowerment day, and it will be packed with information. At any of these events, you can join us and get on the bus. We can pull your credit for free. It's a soft pull, and a soft pull means that it won't impact your credit. And you can always talk to a mortgage lender about where you are in your journey. We hope you can join us at those events as well. Next slide, please. So let's get to the meat of it. I don't see any questions in the chat. So let's just start with some of these questions. Dan, please introduce yourself.
Hi, my name is Dan Beckley, and I am the Community Lending Sales Manager for Ohio and Kentucky. And we primarily serve the underserved on my team and try to help people prepare for homeownership, or if they need to refinance, or if they need to do anything that has to do with real estate. My team can probably get you in the right direction and help you find the resources that you need.
And Veronica, thank you, Dan. Introduce yourself. Tell a little bit about your background.
Hello, everyone. I'm Veronica Bedell Nevels, and I am the owner of Priority Plus Realty in Dayton. We sell in Dayton, Cincinnati, and Columbus on a regular basis. And I have been the immediate past president of the Ohio Realtist Association, as well as president of the Greater Dayton Realtist Association. And being a realtist is an honor because realtors are exceptionally educated and have a lot of experience in the industry and can help you in purchasing your home, going through that process so that we can protect you and make sure that you're getting everything you need from that seller, from that property, so that you can have the home of your dreams.
Thank you, Veronica. That was one of the best decisions that I ever made, by having a strong lender and having a very strong realtor who I know I could trust, who I know I could depend on, who I could ask any question. And that was what led me to buying my dream home as well. So thank you both for joining us tonight. I want to start with the first question. First question I'd like to know is, how much, Dan, do you think we need for a down payment?
That's going to change depending on what your scenario is. So, the lower down payment programs can have required 3% down. There are a lot of programs out there for down payment assistance. I've helped a lot of families get into homes with no down payment. However, it's always really important to save, because if you don't save ahead of time and have a resource for when things don't go as planned, then that's how people do end up with late payments on their mortgage and foreclosures and maintenance on their home that they can't do. So even those folks who do get down payment assistance and have low down payment programs, I've worked with them to make sure that they save ahead of time as well for other things that may come up. So The true answer is you can get into home for absolutely no money out of pocket, you know, but the more responsible answer is let's do that, but let's try to save some money as well so that we'll have it for other things.
Yes. The one thing that I know is that stuff happens in a house, and having that extra cash in your budget to be able to respond without going and getting another loan or things like that is really, really, really important. So thanks, Dan. Dan, would you recommend, how would you recommend a person gets ready in terms of developing that budget?
Well, I mean, there's a lot of resources out there. I mean, as far as using the HUD counseling agency, like Working in Neighborhoods or the Dayton Homeownership Center, the Cincinnati Homeownership Center, all of these different organizations can sit down with you and plan out exactly what your bills look like. It's really helpful if you do use your debit card for most of your purchases, because they're going to be right on your statement. So you can look and see exactly what you're spending your money on if you're using your credit or debit card. And just make sure that you don't overdraw your account, or, you know, not keep your credit balances low on the credit card. But you can actually list out all the things that you are spending your money on, so that you can plan ahead and make sure that you have enough money for your new electric bill, your new water bill, your new maintenance stuff that's going to come up, and your mortgage payment.
And your emergency fund. Should always have an emergency fund. And one thing you just said that really, really interests me is you said your credit or your debit card. I was always under the impression that when using a debit card, you really could be more vulnerable. And that's why I don't use my debit card in most instances, just to get money out of the bank, because my credit card is safer. Is that true?
It's absolutely true. You do have protections though on your debit card as well for fraudulent purchases, but having them on a credit card doesn't directly drain your funds while those things are being disputed and watched. So definitely, if you do have a credit card, it is a much safer transaction, because it's a delayed from your actual funds that you make your payments with and run your house.
Veronica, let's talk to you about, tell us about what your thoughts are about how should one go about getting a good realtor. What's that process like?
Well, the first thing is to consider interviewing some people. It never hurts to talk to one or two people to see if they mesh with you, if you communicate well together, if they understand what it is your goals are, and what their response to you might be when you tell them what your goals are. And that's how you more or less tell if a person is going to be good to work with. Referrals are also a good way to find a real estate professional. And then going to greaterdaytonrealtist.com.org is a good way to find a good real estate professional to work with you.
Wonderful. Walter or John, are there any questions from Facebook? All right.
1 minute. We're just gathering. Okay.
Okay, no worries. I'll ask another question. Veronica, when you started your career, what lessons have you learned to pass on to the top 2 lessons that you've learned to pass on to your clients, people that choose you as their realtor? What would you say to them in terms of beware of this?
Beware of something that sounds too good to be true. And always do a home inspection, because you cannot take the word of a seller that the house is in good condition. Because people live in homes with squeaky doors and squeaky floors and leaky roofs, and they live that way because it's okay with them. They might live in 2 or 3 rooms in the house, and these other issues don't bother them because it's not bothering them. And then they'll say, oh, the house is fine, there's no problems. And then you'll get an inspector who will say, something's wrong with this foundation. You need to have an engineer come out and look. The roof is leaking. There are pipes that are loose here or there. So always, always get a home inspection. Never take the word of a seller, and always have a title search done. Always. Because you want a home that is unencumbered, there are no liens on the property, and you want that property free and clear.
Absolutely. I will tell you that you, even if it's a new home, get a home inspection, because I hate to say it, but contractors might take shortcuts. Been there, done that. So you want to make sure that you don't take, great for the homeowner to believe that his home is great, but you need an expert to go in and take a look, a deeper look that's for your behalf. And so that is great advice, Veronica. Let's see, Dan, what other costs around the mortgage? I think you alluded to it. But what other costs would I encounter when I got to the closing, and then even after, should I be thinking about, other than the mortgage?
Well, I mean, you're going to have to pay your first year's homeowner's insurance. So that's going to be part of your costs. And when your lender puts together your estimates, they should put together an estimate that's including that. And your insurance agent will be able to help you get that nailed down to a final number. You'll also have some tax escrows that you'll have to start collecting, and you'll also have your closing expenses and title fees. All of these should be estimated for you very early in the process, so that you can get an idea of exactly what you need in your circumstance, and then how we can pay for them, whether it's going to be your money, whether we're going to be able to get some down payment assistance from a government or a community organization or a lender like Fifth Third Bank with our down payment assistance programs. So that'll help you. If you know what your fees are going to be and what your costs are going to be, it'll help you estimate. After the closing, you just need to keep in mind that there's no one else going to paint your house. No one else is going to fix your water heater. Nobody else is going to do those things. So planning ahead and using that inspection that Veronica was talking about to plan ahead is a really good strategy. So if you see that the inspector brings up that the water heater is in good condition, but it's on the older side and it probably has 3 to 5 years left, that's a way to start out with a plan that I know that I need to start saving a certain amount of money per month to be able to buy the new water heater that's coming up. And that way you don't end up in debt, and you can end up doing those things ahead of time and planning for them.
That is a great, great point. One of the things that I heard you say is, you said that you want us to do it, look at the taxes and the insurance. Don't the taxes and insurance, aren't they included in your mortgage payment?
The mortgage payment, and many times, will include your taxes and in your insurance as part of your payment, but those are going to fluctuate based on those bills. The bank is not able to control those pieces, so you definitely want to plan ahead if there's going to be any changes to those in the future. If you're filing claims on your insurance, you can assume that your insurance is going to become more expensive. If you're on a tax abatement, or the house was not recently looked at and appraised by the county, then you could potentially see some increases in there as well.
Okay, that's a good point, because you can get overages, and then you'll have to pay a one-time payment, and then even maybe pay it over time, but it will make your bill larger. I see your hand raised, Veronica. Please share.
I wanted to piggyback on what Dan was talking about and what you've mentioned a couple of times, and that is repairs to a home. So one thing that I always insist upon is that a person buys a home warranty, because that is a way that you can protect your home. If you have a problem with the house, even a hot water tank can go out, and you can call the home warranty company. You'll have your deductible, which is usually about $100, and they will repair, replace whatever it is that needs to be fixed on the home. And some home warranties they don't replace roofs, but they will do roof repair. So that's something that's really important that people acquire when they purchase a home. They last for a year. Your contract is for a year. They want you to renew your contract every year. You can pay the fee. A lot of times, and it's not required of a seller to offer a home warranty, but sometimes they do. Sometimes they will. If your realtor, your real estate professional will put that in the contract that they want the seller to provide a home warranty, most of the time the seller will do that. They'll pay for that first year. It's really the best way to keep your costs down on maintenance issues. And you can contact the home warranty company 7 days a week, 24 hours a day, and they will get someone out to take care of whatever the problem is. So that is one way you can help maintain your home. The other thing is the costs associated with writing a contract, going under contract, includes the appraisal costs, which Dan can tell you what that usually is, up to maybe $400. And I don't know, sometimes the bank will allow that to be part of the closing costs. Dan, you can correct me if I'm wrong. But the other cost that is going to come out of your pocket is your inspection. The cost of an inspection and a termite inspection, those are two separate costs, and they usually run from $350 to $400. So you want to have, I would say, at least $600 set aside so that you can make sure you have the money for a home inspection, because the bank does not pay for that for you. You have to pay for that yourself, and you want to have a home inspection and probably a termite inspection also.
Thanks, Veronica. Brittany Love Fletcher, thanks for joining us. I see you have a question. Open your mic and just ask us, tell us your situation, and then let us help you. Okay, she said her mic's not working. So Brittany has a question, and her question is, she says, I am in my last year of graduate school, and I'm wondering, when should I start the process of buying a home? Now, or when I actually graduate in the spring, or wait even longer, like a couple of years after I've built a solid career and job? Dan?
I would say that it's always a perfect time to repair. So if you meet with a lender or you meet with a housing counselor or someone who can help you check your credit, make sure that your qualifications are in order. Doing that at least 6 months before you're ready is typically a really good time. That way, if there's anything that is a surprise, even identity theft or something like that, you can have some time to address those things ahead of time. Secondly, you're going to have stable income before we'll be able to approve the loan. So if you're in graduate school and you're also working, we can qualify you based on your current employment. Having school is something that can help you qualify. So you can use that as work history. So if you have never been outside of the education system, you're going to be taking on your first job. Once you have that job, as long as it's in a reasonable field for your education, we'll use that history of the education to give you the 2 years work history that you're going to need instead of having to wait 2 years after you're done. There's also some Ohio Housing Finance Agency programs, or OFA programs, that are specifically for recent graduates that can help you. So one-on-one, I can talk to you a little bit more. Somebody on my team can talk to you a little bit more about your options, but I hope that answered your question.
Yes, Brittany says, thanks so much. This is your time, Brittany. Ask any question you want, and you can put your, you can look at Dan's information at the end and give him a call or shoot him an email, and he can set you up with an appointment to begin that pathway. You're only 6 months from graduation, so this is the time to really, really start thinking about putting together your plan toward home ownership. You'll know exactly where you are, and you also can, maybe if you're working now, you can use that to be approved. But if you want to wait 6 months to a year, you'll still know where you are and what you need to do to get your dream home. Thanks for asking that question. So my next question is, how much is the application fee? Is there an application fee on applying for a home? Is there a fee when getting a realtor?
For a realtor, there's no fee. The seller pays the commission of the realtor. Now, there are brokerages that have an administrative fee or something like that. They're usually less than $400. And your realtor will let you know that up front, that at the end, there might be some type of administrative charge for that brokerage. But other than that, there is no other fee because the seller pays the commission.
Okay, Dan?
On the lender side, usually one of two things is done by a lender. Either an application fee is collected at the front when the application is put in, or you have to pay for your appraisal out of pocket in order to have the appraisal done. So one of those two things will typically happen, and those are going to be between $400 and $500 typically for application fees.
So Dan, how much, or can I jointly purchase a home with a family member? How's that work?
You can certainly do that. You can choose anyone else who qualifies would be able to go with you in on a house. You don't have to be married. You don't necessarily have to be family. So you just are going to be looked at both, or you're gonna have both applicants looked at, is what I was trying to say. So you'll have your credit and their credit put together side by side, and the lower middle score of those two is going to be evaluated. So some people think that they've got really bad credit problems, and they could have someone who's a family member apply with them that has very good credit and get approved. And that's just not the case. They're always going to be looking at the whole picture of the credit to make that decision. However, if you do have two individuals with good credit and you do need a non-occupant co-signer, some programs do allow for that as well. So you can have a family member that is just a co-signer that just says, my income is going to back this up, and my credit's going to back up this transaction as well, but they're not occupants of the home, and they may or may not, depending on the program, have to be on title as well. So that's something that can help some folks to get into a home. I've worked with some people where they had a very stable, very good household full of income. One of the partners had terrible credit, and they weren't able to qualify. So someone else in the family was a non-occupant co-borrower that was able to help them qualify for that home.
So if I had bad credit, let's talk about that. And by the way, if you have bad credit, we'll talk a little more after Dan answers this. Will that hurt them? And how will that hurt them? If you've had bad credit in the past, but you've improved it. And what are the qualifying scores?
So if you've had bad credit in the past, that's not the end of the day. You can still qualify for a mortgage. It depends on how recent and how bad it was. I'll tell people, and I'm pretty sure that most banking people wouldn't want me to say it, but you could be 2 years away from a mortgage if you file bankruptcy. So the worst case scenarios that I've seen in finance, if they have to go to that case and they have to do a bankruptcy, they could potentially be 2 years away from buying a home. All you have to do is make sure that once that bankruptcy is completed and been discharged, you reestablish credit. You have a very good reason for why that bankruptcy took place. It wasn't just financial mismanagement. Some sort of crisis created that problem. And then 2 years, you could qualify for an FHA loan. So that's definitely, you're not far off. Now, the FHA loan, is that the perfect solution for every person? No, it's not. It's not the best program in the whole entire world. But owning a home, in my opinion, is going to be better than renting almost all scenarios. So it will give you the opportunity to start that journey. And that would be at 600 for a credit score. We have a minimum credit score of 600. Now, that does not necessarily mean that you automatically are approved for the home of your dreams because you have a 601. There's a lot of pieces to the underwriting process that can be explained, and you can discuss your individual particulars with somebody on my team or myself. I'd be happy to help.
Absolutely. Veronica, I saw you may have had a remark. You want to share anything on that question?
Oh, I'm trying to think. He said something that
Who
when
will come
Dan,
back to?
well, I don't know if it was Dan who said it or someone said, someone asked about interest rates, and someone said renting, even though our interest rates are a little high, renting, the interest rate is 100% as opposed to whatever the percentage is now. Did you say that, Dan?
I say things very similar to that all the time. And it doesn't matter how high the interest rates are, you could always potentially set yourself up for a refinance in the future. But every single time that you pay rent, you're making someone else wealthy. And when you're paying rent, you're paying for their mortgage, you're paying for their expenses, you're paying for the taxes, you're paying for all of that, and you're paying for their profit. So it can't possibly be cheaper to rent than own.
Absolutely.
Right.
Absolutely. Building someone else's wealth versus your own. And that's why home ownership really makes sense. So let's talk a little bit about if your credit is bad. If your credit is bad, there's still ways to build it and repair it. And through organizations like WIN or Consumer Credit Counseling, which is located inside of the Homeownership Center of Greater Dayton, and even the Homeownership Center in Cincinnati, have programs where you can repair and rebuild your credit. And as Dan said, if you happen to have a life impacting situation that you can explain, generally in a couple of years, you can come back and start that journey to buy a home. So that's exciting news, Dan, because it used to be tighter, y'all. I'm just keeping it real. And interest rates were a whole lot higher. Where we are is not where we have been historically. So I'd say it's still a great time to buy a home. Let's go to a couple of more questions. It's one of the questions is, how long does it take to buy a home? So when we think about, from Veronica's perspective, once you meet someone, how long was the typical and what's the journey like? From Dan's perspective, when they found the property, or actually Dan prefers that you get approved first and then find your property, because Veronica will need a form letter saying that you have been pre-approved, right? Am I right, ladies and gentlemen? Okay.
It's
So
definitely wise to get a pre-qualification first so that you can actually shop with confidence. Not just because Veronica's going to need that letter, but also because when you do a pre-qualification, you're going to understand payments. You're going to understand down payments. You're going to understand what you need to get that transaction to go through. When you're working with a good lender, they're going to help you find down payment assistance programs. They're going to help you get ready so that when you do find that perfect property, that you can have a smooth closing transaction. So different programs and different lenders and different things take different amounts of time. We're at the third right now. I'm proud to say that we're closing loans in under 30 days. So from the time when you take your application to when you close on your home can be under 30 days. But that depends on a lot of outside factors. The title company has to do their part. The seller has to do their part. The appraiser has to do their part. If there's grants involved, you may be waiting in excess of 30 days waiting for a grant to be approved by a third party. So there's a lot of different factors that are built in there that you need to talk with your real estate professional and also your lender to make sure you have a really good understanding of what the timeline is going to look like. Because it's extremely important that all the steps are followed in the right order and during the right time frames according to the contract.
And can I piggyback on that?
Oh, please do.
So it's like he said, the pre-qualification letter, I need it. Because when we write your contract, that's what the type of loan you're getting is how we determine what your closing date might be, what we're shooting for. So if Fifth Third is doing a conventional loan, but they're trying to get you a third party down payment assistance loan, you might not close for, you might need 45 days to close. So those are the kinds of things that a real estate professional needs to know. And they need to be in communication with your lender so that if there are seller concessions that the lender is requiring, and a seller concession would be a seller helping you with your closing costs. They might say you need 3% from the seller for your towards your closing costs. Well, if he doesn't tell me that up front and we write the contract and this seller agrees to a contract and then it goes to your lender and the lender says, well, she needs or he needs 3% from the seller towards closing costs. We can't go back to the seller to get that. They probably will not agree to it. So we have to be very sure of what it is, what type of loan you're getting, and what it is you're going to need. And your lender is the one who needs to communicate that to your real estate professional. And the other thing that's really nice about talking to the lender up front is you can tell the lender, this is the address of the home, this is the house this person wants to buy, and they can run the numbers better than a real estate professional can and tell you, yes, this is within your guidelines. You want $1,200 a month with the taxes and insurance on this particular property, you'll be within that framework. So that's another reason why it's really important for us to be able to work together with the lender that you're working with.
Wow.
The better that your
Great.
estate partner and your lender are communicating, the smoother your transaction is going to go. Mm-hmm. So it's really important to make sure that you connect as early as possible in the process, your realtor and your lender, so that they can make sure that they're working together in lockstep as a team to make your dream. Because if they're not working together well, then that can cause certain dysfunction in the process.
Absolutely, Dan. Teamwork makes the dream work, y'all. So that when everybody is communicating, everybody is working on your team to reach the goal of home ownership, it happens. And it's happened over and over again. And it can happen for you, Caitlin. It can happen for you, TC. It can happen for you all. And so are there any other questions, any burning questions? There's no silly questions, y'all. I want to see what you're thinking and how we can help you buy a home. I am going to say thank you. And could I have the next slide, please? Thank you so much to my partners at the Cincinnati Herald. We have a list of home ownership contacts. You've heard from Dan and from Veronica, and their information is there on the screen. Their organizations are there, and they really want to help. But you also see some other names. Fifth Third Team, my name and number are there. And then you see from the Homeownership Center of Greater Dayton, the Miami Valley Community Action Agency, Working in Neighborhoods, and Homeownership Center in Greater Cincinnati. These organizations can help you. I do see there was another question, and it says, the Cincinnati Water Works is sending out letters to some homeowners in certain areas in Cincinnati saying there are water service lines made of lead within the main water main replacement project area. Therefore, is it possible that the service line may be made of lead? They are asking certain people to verify their service line material. GCWW has developed a lead service line replacement program. Is this issue covered in an inspection search, or will there have to be additional search for this lead issue? The property owners are responsible for the private portion of the water service line from the property line into the house and the building. Wow, what a great question. What
Yes.
a great question.
It's a fantastic question. And yes, you would have to do an additional lead-based inspection. So we typically are always talking about lead-based paint, but now we're learning that we're talking about lead in pipes in our water supply lines. So you would have to order that type of lead inspection if you're in an area where you suspect that is an issue. And you want to be informed. You might still want the home, or you might not, but you will have to order a separate inspection because most inspectors are not lead certified, and there are inspectors who do nothing but lead certification.
So Veronica, do you know how much that might cost a potential home owner?
I only know about the lead-based paint
Okay.
aspect. I've never done a lead-based water line inspection. I would assume that the lead-based paint inspections are usually around $500, but the lead-based water line, I would assume you probably are looking at probably $1,200 or something like that.
Wow. And so that is really, really something to think about. And certainly if you are interested in that, the person who asked the question, it said, look, I thought it was Marilyn Reese, that you would really want to get some estimates from some appraisers before you delve in it. I mean, it really should be the house that you want because you're making a significant investment that you could use as a down payment. So this is something that you would have to weigh out and decide if that expense was worth it or if you needed to look for another house. Now, in many instances in these areas, the houses may be cheaper. So if you were going to do a gut renovation, you could put that as a part of your renovation cost.
Mhm.
But at the end of the day, you really want to think about what you're getting into as far as that inspection cost, because from what Veronica shared, it likely will be more significant than the other inspections. Dan, any thoughts on this?
I would just say that, you know, it is important that you're under contract and that you're really interested in that home before you do expend those expenses for different inspections. That's a question that does come up. People ask me, should I get this house inspected before I go under contract or after? And always after. You want to have a firm agreement, but that's why you have an inspection period, that you have an option to leave the contract within that period. Because if you do have an inspection that comes back poorly, you want to make sure that you do within that time frame so that you can walk away from that home and find something different. I honestly did that twice when I got my first home. I walked away from 2 contracts because I found the first one, my inspector showed me that there was going to be a water line 6 inches above the ground in the basement. He showed me a water line and I didn't see it. And he told me that's where the water was going to get up to when it floods. And I said, okay, that's not going to work for me. I need to put my drum set down here, Then the second place had a lot of lead-based paint and I had small children. So there was cracked and peeling lead-based paint everywhere, and that the seller wasn't willing to fix it, and I was able to leave that contract as well. So it's important to get your inspections and determine what's necessary. Usually starting with a regular home inspection will lead you to the other the other things that you may or may want to add to that after.
And Dan, you said something really important. You actually said that if the seller doesn't want to pay for it, so you could actually push back and say, hey, I need you. This is an area that has been designated to perhaps have problems with the pipes. I need you to include in the offer a lead pipe inspection. And I see you shaking your head, Veronica, and your hands raised. Go ahead. Please
Yes,
share with us.
that I wanted to piggyback on that particular comment that he made also, because in the contract and during that inspection period, we can go back. We always go back to the seller with what we found, what we want the seller to repair, replace, or give us a financial credit for. So we don't always just walk away. We try to negotiate with the seller. And if the seller is not willing to negotiate, then you have a right to walk away and get your earnest money back. We didn't talk about earnest money, but earnest money is part of the process also. That's your good faith money that you put up to show that to show the seller that you're really serious about the offer that you made. But we always negotiate whatever the problem is with that seller and see if they're willing to participate in some way of either repairing, replacing, or giving you financial credit towards whatever the problem is. So that's what I wanted to say.
Thank you so much to our experts tonight. They are phenomenal. You've seen this, take a picture of it, screenshot it. You got a whole page full of experts who are ready to help you on your home ownership journey. And this is just the beginning. It starts with the information, informing you about your decision, making that first call, making that first step for us to be able to help you along the way. You can do it. We've done it. Countless others have done it. And so it's your turn. And we are here for you. I'd like to give last words to both Veronica and Dan. Tell us the one thing you wish you would have known if you would have changed, if you could, when you bought your home.
I think
okay.
I wish I would have, oh, well, let's see. My first home ever was FHA, was in Los Angeles, and I was single and it was a double. I think though, I wish I would have understood the taxes better, and knowing that taxes fluctuate and that, when you're voting for a levy, you might have a tax increase. And so things like that, those are things that, you don't think about in the beginning, and it shouldn't matter. I mean, it shouldn't be something that prevents you from purchasing a home. You just need to understand it. That's all.
Absolutely.
Dan?
When I bought my first, I was just about to turn 23 years old. And I had actually had a horrible experience working for a lender, and quit the mortgage industry briefly and started doing something. I was working for GE Capital at the time. And so I didn't have the up-to-date knowledge about programs and pricing and mortgages and what was going on currently. I really, really wish that I would have had a lender that offered me more than just an FHA loan. I really wish that I would have known more about different programs and products. I know now with my knowledge that I have now, 24 years later, 25 years later, I know that there are down payment assistance programs that can help people get into homes. There are housing self-sufficiency programs through CMHA. You know, there are low down payment programs. They are homebuyer education programs. I really wish that I would have known all of the resources that I know about now, because I didn't. I just went through it by the seat of my pants. Lucky had enough mortgage, you know, history by being in the business a couple of years before that, but not enough to really have made the best decisions, because I didn't have the resources. So that's why I'm so excited that we do these calls, that we do these presentations, is because we make the resources available to people. So you can see on this screen everybody's contact information, and everybody. There's not a person on here that isn't going to be a valuable resource to you.
Not one person. Thank you so much, because you are one of our valuable resources. Fifth Third Bank is so happy that you've joined us tonight. Next slide, please. And so this is the close of our deep dive homeownership forum. So we've had a great reception on Saturday, and then this hour of power tonight. We want to thank the Cincinnati Herald, the Dayton Defender, the Dayton Weekly News, the Working in Neighborhoods organization in Cincinnati, the African American Chamber in Greater Cincinnati, the Homeownership Center in Dayton, Ohio, the Home Ownership Center in Cincinnati, Ohio, the National NARAB Realtors Association, which is all over in Cincinnati and Dayton, and Priority Plus that goes from Dayton to Columbus to Cincinnati, and then Miami Valley Community Action Partnership in Dayton, and Alpha Kappa Alpha and Kappa Alpha Psi fraternities. We at Fifth Third Bank want to say a hearty thank you to all of you, and especially to all of you who've joined us tonight. We hope that your homeownership journey has been enhanced by this, and we look forward to seeing and hearing from you soon. Again, take a picture of these contacts, and we look forward to seeing you soon. Have a great night. Bye-bye, everybody.